Gopal is an evergreen guy in terms of understanding which IT product companies are moving. So good to have you both. Thank you for joining us. Vikas, you got it right in terms of the IT and where the cycle was headed. Markets are saying that, look, we have re-rated the stocks. So for investors, now what is left? Because I can argue back and say that while business is growing, attrition rates are high, margins will remain under pressure, there would be a boom time, but along with boom time, there would be wage inflation and other structural issues.
I think lovely chatting with you, like always. I think I'll take you back to a similar discussion. I think one thing which is very clear in the tech is the strong demand environment. And this strong demand environment is likely to remain so for next 5, 7 years. It is not a 1 or 2 year trend. It is a sustainable trend. So whenever any those kind of challenges you did mention, whether it is attrition or margin pressure, all those can be managed as long as the demand environment is very strong. Because when in a strong demand environment, the competitive intensity also remains low, and clients' ability to kind of take on hikes and all is very, very okay. So I don't think one should really focus on. Of course, we have had reasonably strong run over last 1 year or so. I think still there's a lot more money to be made in IT services. And IT services is not like what it used to be traditional IT services. I think all of the companies have kind of a transformative change in terms of services they offer. They are offering transformative solutions to the businesses, not only doing, a particular, patch. It is like, end-to-end solutions, right from the product to delivery to the customer and experience management and everything else and efficiency and everything else. So I feel that we are in a still a long cycle. I don't think one should get worried and perturbed around some of those attrition issues. Attrition comes only when there's a demand environment, right? Otherwise there won't be an attrition. So I think I would take more comfort in that rather than worrying about it.
Gopal, how different is this current IT boom from what we saw, let's say, a couple of years ago? I mean, that time IT companies, both in terms of demand and growth, they went absolutely gangbusters. This time, is it the same companies who would benefit? Yes, the service offering would be very different from what they gave last time, but ultimately the big beneficiaries would be still the 4-5 big names.
I think, as far there are two things, IT services and technology. I think IT services per se, I think, it will be widespread according to me because there's an overall demand environment very strong. Companies are right now, in fact, in my opinion, struggling to keep pace with the, that demand environment. And you will see some amount of, benefit or a lot of benefit will percolate down to mid-tier IT companies. And we are seeing already how they have been growing. Order book accretion has happened. So many small companies will migrate to mid or large, become mid or large. So I don't think you should take this as a short-term sort of. It will be as transformative as it was kind of last year. In so many years, India has created $165 billion of IT services exports. In next 5 years, we will add almost half or maybe more of that to go to 250 to $70 billion kind of thing. Now that is the kind of size you are talking about, and when that kind of size comes about, the impact of that is transformative on the country as well as the sector.
Right. Gopal, if I could get you in on the same point, what is your own sense on whether or not the fundamentals for Indian IT are intact, irrespective of these, niggling quarter-to-quarter worries like attrition?
Hi, great to be here. Actually, my mind is on the digital space. It's not on the IT space. So fundamentally, I'm still enthralled with what happened in last 2 weeks, which I call as the $1 trillion moment for India. In a few years' time, in 2025, I think the Indian market cap is headed to 5 trillion, right? And I think the next trillion is going to come from the digital companies. I think the IT companies is a fabulous story, but it's a story that's on its way, as Vikas said, 165 billion in exports. And nearly 17% of the Indian market cap is IT and BPO right now. So I'm really enthralled with what has happened with the Zomato issue and the $50 billion of IPOs of digital companies that are in the pipeline. I think it has completely opened up the next $1 trillion of market cap for India. And I think it has also shattered many myths about the Indian digital consumer tech or any of the Indian digital industries that are possible. So I'm really thrilled about it. Remember, the 27% of the market cap in the US is digital companies, not IT services companies. In India, it's 0.88%, and that too, we had to make a lot of effort to estimate that number actually. So, and in US last year, nearly 40% plus of IPOs were digital companies. I think the digital movement, the tech company movement for India is open, and that's, I think, what we should talk about. And I'm happy to talk about the myths which I believe it has shattered. So.
Yeah, absolutely. So, Gopal, in that sense, would you say Zomato has marked India's FANG moment after the mega IPO that it was and the mega listing gains thereafter? Do you think Indian internet companies, because even as we speak, you've got a Nykaa and Policy Bazaar already in fray for filing their DRHP.
Absolutely, absolutely.
When we look at 10 years from now, would you say that Indian IT companies or Indian new age internet companies could actually form 15 to 20% of the index market cap, perhaps?
20% in 2025. That's what I'm betting on. And that's $1 trillion of the $5 trillion market cap that one should see in 2025. Clearly, fully agree with you. This is the moment that has happened. Not only we add Oyo, add delivery to your Policy Bazaar and Nykaa story. I'd like to talk about 3-4 things that I think it is myths that is busted, right? So, for example, first myth was what you said. Can India build new age internet, consumer tech, digital tech companies? Short answer with Zomato's response to Zomato and nearly 2 lakh crore worth of application and this pipeline that is there, I think the short answer is yes. Second myth I think that it is busted is, as a VC, as a PE, as a private equity investor, we are now investing in venture growth, which is Series B, Series C tech companies. And everybody was being told by the foreign VCs, you have to domicile your company abroad. You can never list a tech company in India. I think that myth is beautifully beaten by these 4 or 5 companies in the pipeline. And I'm really thrilled about as an Indian. Myth number 3 is, Indian private equity funds and venture capital funds cannot build these businesses. You only need foreign funds. And that's maybe was true for what happened with Zomato. But look at Nykaa. We were the early investor in Nykaa in Series A. And Indian family offices and other funds followed them in Series B and C. And today you have an Indian AIF or VCP funded company absolutely coming to launch, and you're going to see many more in the next 5 years. To me, myth number 4, and I think I'll let Vikas talk about it, is what does this mean for the public market investment community, which has been talking about the surge of passive investing in the last 2 years. SEBI chairman in his speech last week talked about ETFs being 12 or 13 or 15% of the mutual fund industry. Don't remember the number. And I think myth number 5, when we saw Tokyo Olympics this time, 1824 drones painted the symbol when the Olympic inauguration took place. Similarly, if you think about the fact that, today the millions and millions of public investors that have come, right? Nearly 70 million accounts in the DMAT space. Small investors have come. They have created a new depth for India. And today, Indians are therefore savoring, in my mind, they are savoring the investment benefits of these companies. Imagine out of the 100 billion or so of exits of VCP in the last few years, nearly 95% of the profits have been exported. Now, the profits as these companies list in India are going to be savored also by Indian retail investors, Indian pension funds, Indian mutual funds, and Indian insurance companies. I'm thrilled. I think I've seen 5 myths being busted in the last 5 weeks. So I'm very, very thrilled, and I'm looking forward to the next 5 years for the 20% of the market being tech companies in India. Sorry for the long-winded speech, Aisha, but I just thought I'm so enthusiastic about what's happened that I couldn't bear to not share it.
Okay. So 5 myths that the Zomato listing has managed to bust. Vikas, let me ask you about the stage at which all of these new age internet companies are listing. They've been through successful rounds of fundraisings, with PEs, with venture capitalists. They've moved from unicorns to unicorns, multi-billion-dollar companies that are now listing on Dalal Street. The question is that after these multiple rounds of re-rating that we have seen during the unlisted space, do you see the potential for those kind of returns for retail investors as well when they participate in the secondary market and want to invest in these internet and new age companies?
It is never to be looked at retail or institutional. Thing is that, if you ask my view, like Gopal was mentioning, that this new tech is the whole new space which is going to get created over the next 5 years. And what we have seen is just a beginning of a very big trend. If you were to look at historically, most of Indian businesses in this space went abroad to raise capital, get listed, because there was under appreciation of that in India. Now, I think Indian investors have matured, especially the institutional investors, and the Zomato kind of listing has shown that. So what we are going to witness is the beginning of a very, very long trend. And I think most investors, all of us, including public market investors, will kind of figure out how to evaluate these companies, how to look at this, because this is a very early stage. Like how it happened in any cycle, or in any new emerging sector. This has a lot more appreciation in US kind of markets. So, if somebody were to look at with the same lenses, a lot of listings like Amazon and all those things early on, they would have missed out the whole wealth creation cycle. And in my opinion, we should look at this, because I think this will encourage many more players to come and scale opportunities, which can become 5x, 10x, 15x, 20x, those multipliers. So I would not really kind of only look at with a little narrow view, but of course, you need to have a pretty long time horizon. You need to understand the franchisee, and also one should be ready with the fact that in tech, disruption risk will always be higher. So it's not that, it comes risk free. It needs, of course, detailed understanding. It needs, for platforms like Zomato, who has kind of monopolistic situation, unlikely to get disrupted. But who knows? Things change in technology very fast. So one has to be very, very careful about those. Many of them will be success stories. Many of them will not survive in fullness of time. But one has to play the game. One cannot ignore, because it is a very, very new sort of trend which is going to outlast for next 5-7 years or maybe more.
That's a great point that you've raised, that the pace of disruption in the new age internet, digital companies is obviously much, much faster than what you call as your traditional companies. Gopal, how can retail investors deal with that? Because today, yes, Zomato has a monopoly, but no one will stick their neck out and say that, okay, this is a firm monopoly of sorts. You cannot predict what will happen in the next 3, 4, 5 years in that particular space. That can be said for almost every new age internet company space, be it fintech, be it consumer tech. So how can investors deal with that fast pace of disruption?
No, it's a fabulous question, Aisha. Really, if you look at it in NSE right now, nearly 41% of participation is from retail investors. The last 6 months alone, some 10 million demat accounts have been added on. So so my suggestion to most of them is find a great manager like Vikas. I have invested in this fund, and I think give people like him money, because this requires a very strong navigation, brake, clutch, and acceleration and steering system to manage. So that would be my advice to most people, that there is alpha in the market, and the alpha can be best sought out in the hands of professionals like Vikas. That would be my suggestion to everybody. But having said that, who hasn't read Ashwath Damodaran's blog on Zomato? 40 rupees and 77 paisa or some such number is what he predicted. And the market is wherever it is, 130, 140. Jeffries has put out a 150 or so pricing yesterday. And then somebody said UBS has put out an even higher number. So I think even Ashwath Damodaran is agreed on one thing, that when these companies become profitable because of the scale they're building, they are going to generate a very large amount of big numbers in terms of profitability and cash flow when it happens. So I think this is a place where nobody can afford not to be in. They must be in this space. And whether they do it by designing their own portfolios or day trading like my daughter does on the Zomato stock, or giving money to have people like Vikas, which is what I would prefer to do, I would recommend the last choice.
Thank you, sir. Truly appreciate.
Okay. Vikas, the nature of the Nifty 50, the composition of BSE and NSE, do you see it shifting more towards these new age internet companies? Like, Gopal mentioned, the next trillion will come from this space. How do you see the nature of the market, the nature of the indices as well, shift towards these new age internet companies?
Good question. I think we have seen that, there's always a big shift happening every 10 years in the index, keeping in pace with the underlying change in the economy. I mean, there's no doubt on that. What was in 90s did not exist in 2000, and what was there in 2000s wouldn't exist in this decade. And so I think this keeps changing. And there's no denial from the fact that I think technology is going to rule the way. Consumer tech will come, enterprises will use more tech, product oriented companies would come, which were so far underappreciated and did not scale up. So I think this new edge of tech oriented growth across the globe, including in India, I think is here to stay. And this will, of course, create a fairly large pie on space for it's on the table. And as I think we see many and more players coming on the sort of on the boards list, you will see they find their space in the indices over a period of time. And so I would not, I mean, I don't know whether it'll be $1 trillion or $1.5 trillion, or we'll only know in the time, and we all can, but it will be a significant portion, as like Gopal was saying, it will be a very large, significant portion, and we have to pay attention to that because investing is all about not only what's happening, but what's going to happen, right? And that's where if you can figure out that what's going to happen, or you can kind of sense where the trend lies in future, you can kind of be a little ahead and position your portfolio differently rather than approaching from the historical bias or historical bent of mind. Because investing, you constantly need to keep evolving.
May I add to this, Aisha?
Yes, please.
I just think if the IT industry with 500 billion-ish market cap in India has born a wonderful child, which is going to be the future. And that child is the Indian SaaS industry. And we haven't even begun to talk about that. McKinsey 2 weeks ago presented at SaaS Boomi a beautiful presentation talking about the opportunity for $1 trillion market cap only for SaaS. Forget about consumer tech. They said if SaaS can reach a $50 billion revenue at a 20 times price to revenue multiple, and I'm not underwriting that multiple, I'm just telling you what they said, that's $1 trillion. And I think the IT services is the father, the mother, the grandfather, and the grandmother of this industry, because the talent it has provided, the credibility it has created for India, and the acceptance of Indian software across the world in terms of product software is the next big thing. We know Zoho, we know Freshworks, and we know, of course, Zenoti, we know about Darwinbox, the recent ones which are there. But you're going to see a whole new flood. So if we have this conversation in a year or two, it will not be about consumer tech. It will be about SaaS. And that's another trillion. So if this is the next trillion, this is the trillion after the next trillion, right? So I think that is still waiting in the wings. And I'm investing in that area. And I'm super thrilled about the kind of talent that India is producing, the cost at which they're able to produce it, and the speed at which they're able to adapt themselves to overseas markets. So that's yet waiting in the wings to be born.
That's the great part about chatting with Gopal. You will keep getting $1 trillion ideas. I think the more you keep him on the show, you will have many more of them coming up.
Thanks, Vikas.
No, I completely appreciate that we are in a very realistic and a very new world, and completely all that. But Vikas, you know it much more than anyone else that for those who got carried away in the Y2K boom, and for those who got carried away by getting multiples like, let's price a stock based on not PE but PEG, and when infrastructure companies were valued in 2008 at EV and at a profit per unit when it comes to some power companies, they suffered. Ultimately, it is about cash flows, it is about dividend yield, ultimately it's about those factors. And these factors will be overlooked when some of these companies will go public. So I'm purely talking about from the public market investor for those who are ignoring the current excitement. Vikas?
Nikunj, I think it's a very good point. The only thing I would say is that, we all see markets will have its euphoric phases, booms and busts. There's no doubt on that. We will always, tilt on the pessimism as well as the extreme optimism. That's the nature of the market, right? The only thing you have to figure out what stage you are at. And currently, I think where we are, I don't think anywhere we are, anywhere close to a euphoric kind of phase, according to me, because the kind of underlying changes are happening are very, very structural in nature. And we are just beginning to see a very early stage of that. I mean, if you were to ask, I mean, Amazon, in first, 10, 12 years, they did not have any sort of, cash flows and the dividend yields and all, right? But in every newsletter, Jeff Bezos talked about importance of cash flows and dividend yields. So he was building the business with a different mindset. And his core set of investors who looked at Amazon differently gave him money, and not only gave him money, also benefited from that significantly, right? So again, it's a slightly, the world is changing. World is changing where, a winner takes it. All kind of platforms are getting built. And in those kind of situations, we will have to build new dimensions or ways of looking at evaluating businesses. If we continue to look at those newer opportunities, new ways of doing business with the same lenses, probably you will find some part at least missing out on that. And again, in my opinion, one should do what one understands and suits. So I'm not saying that everybody should follow this and not follow. Ultimately, there are 1,000 ways of skinning a cat, and one can make money sticking to their own style. So I'm not recommending any style. All I'm just saying is that this is not where I would still say that it's a peak of the dot-com bubble or a peak of the infrastructure. Of course, there will be excesses like in any market, and we will see they coming here also and playing out. But at this stage, I'm not really would be at least saying that this is kind of way up there on the euphoria side. So it's probably beginning of early trend.
Gopal, consumer tech, it's a new sector, new dimensions, new consumer habit, new connectivity, which is a new disruptive form of innovation. Similarly, SaaS, completely different. Drones, a technology which did not exist. EVs, these are things which are innovative and disruptive. But there is one space where a lot of excitement is on, and the jury is not out whether the big banks would gain or the fintech world would gain. Now, big banks and NBFCs are trying to become fintech, and there are a lot of fintech companies which are trying to be a bank and NBFC. Who will win the race there?
In my mind, Nikunj, basically, this is a great question. And in my mind, if I look at it, there are going to be winners in both. And I'm not trying to be clever in my answer. When I talk to the CTOs and CIOs of the new banks, by which I mean the private sector banks and the public sector banks, the kind of change that are happening in the banks are awesome. The technology spends are awesome. At the same time, when you talk to the Indian payment companies, because the three pieces of the puzzle here, you have the payment companies like, say, a PhonePe, which is amazing, and several of them. Then you have the banks, and then you have the new fintechs, whether it is the investment space like Zerodha or in the loan origination space, which is taking place, right? I think the fourth thing that people are missing out are the Bajaj finances of the world. So look at the space in these four dimensions of what is going to be there. I think in India, you're going to see an orchestra and not a boxing knockout model. So whether it is, we're all fresh from yesterday's acquisition of this Australian company by Square, right? What, $29 billion for a buy now, pay later company. But who is India's largest BNPL company? It is Bajaj. And that too, now that the PPI has UPI, and I'm sorry to get into this alphabet soup, but the prepaid instruments can now access UPI. You're going to find the traditional players also are going to innovate. Bajaj is a very cutting edge innovator in terms of technology, Bajaj Finance. So in India, I think it's going to be like an orchestra. It's not going to be like who versus who. You're going to find with co-lending, all the NBFCs originating through backends, through financial infrastructure for the banks to be doing the co-lending with the co-lending policy of the Reserve Bank of India. You're going to find the new umbrella, if they get approval, the new umbrella enterprises for payment coming with more instant payment solutions. You're going to find the large banks also trying to compete with them. So I think the financial services market is going to grow with the GDP, right? So as you go to 5 trillion, if 30% of the market cap comes from financial services, you're adding at least $1 trillion worth of market cap in that space, more. So you're going to find multiple people grow, and you're going to find everybody working together. Reserve Bank is architecting India in a very thoughtful manner to make sure that every piece of the ecosystem is going to play with each other rather than against each other. So I see a very different solution in India. And actually, I see India as being role model for the world, where you have this jugalbandi, not more than a jugalbandi, right? I don't know when it is, I don't know what's the right word. It's an orchestra. I can't think of a better word. So I don't think it's A versus B. And I don't think anybody is being left behind. You go to State Bank and see YONO. It is amazing what State Bank is doing. And at the same time, you go to a fintech that is doing loan origination for students and then sending it via cred avenues of Vivriti as a marketplace infrastructure to a bank for co-lending. That's equally amazing. So I'm super enthused about this. I'm also associated with Reserve Bank's Technology Innovation Hub as a board member. And from what I see from there, many winners. And of course, like everything, Nikunj, a few losers. That is inevitable because not every company can keep up with what they need to do.
Okay. All right. Well, we'll leave it at that. Vikas as well as Gopal, thank you so much once again for joining us today on the market and, decoding how, the next gen of companies would look like, their impact as well on the Indian equity markets. This is definitely going to be, I suppose, the FANG moment, if you could call it that, for India too.